Hello, everyone, and welcome back to the J22 report. I am your host, Johnnie Market. You all know that drill. Hit that like button and subscribe if you already haven't. And I just want to do a little disclaimer that nothing on this video should be construed as financial advice. This is just my opinions on the market, what's happening, and that's pretty much all I have to say about that. So, and just always remember, hit that like button. It will help the algorithms. And so let's get into today's market. I wanted to do a video yesterday, but I was too tired. I had a long day at work. So let's first go into the economic data. So if you actually look at it, PCE right here is at 2%, above consensus. Personal income, this should be negative, but it's only rose 2% below the consensus of 4%. And this is what the Fed looks at. Consumer sentiment on Michigan was 66. That was above the expected 66. Well, it's 66.4, above the expected number of 66. So if you look at this, keeps going as mixed economic data, but the markets really went up. Let's take a look. Really went up, and I think that's because inflation numbers were good enough that the Fed will start cutting. And to show it, Powell indicates Fed won't, right here, won't wait until inflation is down to 2% before cutting rates. Powell referenced the idea that central bank policy works with long and variable lags to explain why the Fed won't wait till its target is hit. So yeah, that's what is really going behind is they're probably, this is just my opinion. They're probably, look at this channel. They see the stuff I'm seeing, and they're probably trying to prevent a recession or depression or whatnot. So anyway, gold actually had a strong day too. Gold lately and the stock market have gone up, and that's not unusual. Gold does go with the stock markets. And so yeah, gold was up $22 and silver was up 8 cents. It's below that 30 point. So, and if you look at the Huey, just gonna go to Yahoo Finance. Looking at the Huey, let's go look at the Huey. Where is that? Well, I'll just do GDX for now. GDX was up 29 cents, up in the after hours. So it's always good when I like it when the gold and the gold stocks uh go go up together. The Huey's my favorite gouge, and that was up 3.15 points. So the stocks are doing solidly. GDX, SILJ, silver, miners. Oh, there it is. Yeah, the silver miners index, that's up too. So yeah, if you look at that, that's pretty good. So that's sort of the economic data. Now, what I think is going to happen is you can see the inflation's going up much higher than expected. When the Fed starts cutting rates, what's more likely to happen is, based on my opinion, is inflation's going to go up much higher than expected. And that's probably, Avi Gilbert, a couple others think gold miners, and everything's going to go up a lot. And I think that's probably what will happen. Let's get into some stuff on the actual economy. And this is why I think eventually we're going to see really bad data within the next 1 to 2 years. As they said earlier in this video, there's a lag. And so let's go here. New home sales hit 7-month low in June as high mortgage rates pressure buyers. In my opinion, it's high prices, but new home sales unexpectedly dropped last month as high mortgage rates continue to keep potential buyers on the sidelines. And this is probably why the Fed's probably going to cut rates as they see prices are going to collapse, in my opinion. So let's see. Look at this new home sales. Look at this. New home sales is a precursor to prices. You don't believe me? Look at this. This is 2019. Then look at this 2020. Boom. Just look at that line right there. And what happened to prices? They went up. And as I said, there's a lag. So now new home sales, now they went up here, but now they're really going down, and that's a precursor to lower home prices. So ongoing challenges include high mortgage rates and elevated home prices. So right there, they're even admitted what I'm saying. Prices are too high. They have to come down. If you want a healthy economy, they're going to come down one way or the other. So yeah, new home sales will be able to recover in the second half of the year. Yeah, sure. They're just saying that to keep sentiment up so prices don't crash, in my opinion. Who knows? Like, I don't think I can be sued for anything on this because I'm just giving an opinion, but you never know. So allegedly or whatnot. Look at this. Home buyers, on the other hand, are hurrying to build houses to address the shortage in the resale market, which has been dampened by higher borrowing cost and discouraged more sellers from listing their home. Discourage more sellers from listing their home. This is what I said. There's pent up selling. It's not pent up demand. It is pent up selling, and that's going to be a tidal wave of tsunami in the future, and that's going to help bring prices home. So yeah, medium price increased. So medium home prices. Look at this. Builders have continued to offer incentives like mortgage rate buy downs, but they continue to grapple with their rising cost, interest rates, and inventory challenges. So yeah, that's one thing I want to talk about. You can see good data in that article. So unsold new homes hit an all-time high in the South. So now we're already, the bifurcated market will eventually turn to a crash based on everything I say. Remember, just my opinion. I can't guarantee anything. But a historically high number of new home sales are up for sale in the U.S. South, thanks to Florida and Texas. Remember, Florida and Texas 3 years ago were the bellwether. See how south a market can turn? Uh, there were 293,000 newly built homes on the market, topping the previous high of 291,000. Set in August of 2006. Wow. Yeah, if that's not a precursor, what happened 2 years later? Supply is tight elsewhere in the US as high borrowing costs discourage sellers from listing their properties. There you go. Once again, pent up selling. And that's going to be, and developers race to build more new homes. There you go. Yeah. The glut of new homes may eventually help push down prices, which remain well above pre-pandemic lows. Is Yahoo Finance being injected with truth serum here? Did someone inject the writers and editors with truth serum? Uh, there's a measurable correction already occurring in the market on list prices. So there you go. There you go. So yeah, so here it is. If you're listening to this channel, you already know how it happened. So it's more stuff on the housing market. You're starting to see the narrative of shortages and everything collapse. As you can see, they're doing everything they can to uh keep it going, but we'll see. Let's go to auto repossessions are soaring. So Uh, so yeah, this is July 22nd. This is 5 days ago, so this is new. Auto repossessions are soaring. So yeah, and the funny thing is, how are people going to buy houses? If you default on your loan, it's going to be hard to borrow. You declare bankruptcy, you can't borrow for like 7 years. From I've never declared bankruptcy before. Bankruptcy means you can't borrow borrow credit for how long? Yeah, let's see. Even though bankruptcy remains on your credit for up to, you can start rebuilding your credit. Maybe you can't. I have to look in. Oh, how long does bankruptcy affect your ability to get credit? 10 years. So if you file bankruptcy, like the ability to get credit and buy homes is going to be really low. So a study shows cars are being repossessed at a shockingly high rate through the first half of 2024, exceeding pre-pandemic levels. So there you go. There it is. Car prices have skyrocketed in recent years. Not everyone can afford these monthly payments. A new study shows. Auto Recent data from Cox Automotive shows auto repossessions are up 23% compared to last year. Significant jump, taking repos to levels not seen before the COVID-19 pandemic. Data does not differentiate between new or used cars purchases. And yeah, that's the thing. They crashed the car market. When people lost their jobs, they can no longer sell their car and just pay off the loan. So yeah, this is the Fed to blame because they wanted to tackle. So yeah, the increase in repossessions actually started last year as policies and programs designed to help people through the pandemic came to a close. So as you can see, all the stimulus is wearing. Also, people are going to be going. Uh, the 23% surge is both shocking and worrisome and could be a forerunner to more dire economic downturn. Similar things happened in the 2000s, starting with delinquency in auto loans and credit cards. The housing bubble popped, wrapping up the decade of the Great Recession. Sound familiar? Like, wow. If you, you know, so yeah, the US auto, I've lived through that. Look at this. Cox Automotive forecasts repossessions to increase slightly into 2025 before holding steadily thereafter. Yeah, we'll see about 20 after. But yeah, these repossessions are going to keep increasing. And I'll tell you this, it could get better, but it will get better because less people own cars. So if there's less people to repossess, eventually there'll be less cars. So as you can see, auto repossessions, they are going to continue and things are going to get worse. Of course, they always have to say like things will get better afterwards. They never admit like, yeah, things are gonna get bad, and then it will go from auto loans to credit card bankruptcy, eventually housing problems. And just like in '08, that's what it's looking like here. You see it here. But as I said, this is an election year. They're gonna do everything they can to prop up the markets. So I am not, in my opinion, not advice. I don't think there'll be a crash, at least yet. 2026 or 2027, there'll be something really bad by then, in my opinion, regardless of who's elected. Uh, can't guarantee performance. Market may be booming in 2020. Who knows? But and gold, I'm looking at up to 3,000 because I think when they cut rates, I think inflation will boom. If not, the economy, they won't cut enough, and the economy will start declining, and then they'll go down to zero, and that will drive up gold. And So, and then I think after this, there'll be a big correction in just all asset prices. And I think gold will be on a multi-year, multi-decade bull market up to 5,000, and then it will stop, but it might have another 4 to 5 year decline after this run up. So we'll see what happens, but I think the stock market will go on like a 20-year bear market personally. And once this topping process begins, we could already be in it. The Elliott waves, they talk about 6,000 stocks. So I'm bullish on other aspects. I don't talk it, but I think once this cycle's over, which is coming to an end, I think the emerging markets, those are going to be probably the focus of my channel because I think that's what will do well. Hopefully, I'll be out of the United States soon. I have a foreign wife, so I can get citizenship. Uh, I do think the best future uh, at the next 20 or 30 years belongs, I want to say the East, just outside the United States. That's where the opportunities will be. Uh, and as someone who's married to a family with not outside the United States, and a lot of my in-laws don't speak English, the United States is losing a lot of respect around the world. I can tell you that just from personal conversations. Tons of people in the Baltics. Uh, tons of people from Asia, Eastern Europe, among other places. A very immigrant surrounding. U.S. is they're losing it, and a lot of countries want to decouple from the United States, and I see that happening in the future. So I think they'll be very tough, and I even think you'll see like Australia. They're even having meetings. You'll even see countries like we wouldn't even expect, like Canada. They have so many natural resources, sort of decouple from the United States in the future. So anyway, that's all. That's my opinion. Don't know what's going to happen. Can't guarantee results. Not investment advice. This is just a blog. It's expressing opinion. Do not act as a fact. It's just no different from an opinion. So anyway, hit that like button, subscribe if you haven't, and I will see you next video.